J-Blog, May 20th, 2009, Wednesday. This is a midweek review. First thing I always like to look at is the general market. In this case, we're looking at the S&P 500. And I was talking about that I feel that there was a pullback coming. Pullback hasn't been quite as dramatic as I expected it to be. Actually, Monday was an up day. Tuesday was a flat day. Today was a bit of a down day, but nothing too serious. So at this point, if there is a downturn coming, it's certainly not going to be a quick affair. I still believe that a retracement of the current rally is going to happen. Last week I started talking about selling some of my long positions, taking a hedge position against some of my long positions that I didn't want to sell, and actually getting into some short positions. So it's not really a short position, but it's a short stock. It's an inverse stock. When the stock market goes up, it goes down. It's SKF. It's a financial inverse. So if the financials, it's the opposite of UYG. UYG is the ultra financial, and this is the inverse ultra financial. So if the financials go down, SKF will go up. And I just want to show the large chart and where it has been. SKF is not for the faint-hearted. It moves very fast, especially when it gets towards the top. It really goes hyperbolic. So be careful, take small positions, and hold on to your seats because this certainly isn't anything for hard patience. Currently it's trading between 40 and 50. Now this stock is something that for the last 3 years, even at the height of when everybody believed everything was fine back in 2007, um, it was still in the 60s, it was in the 70s. For the last 2 years it's pretty well spent its life in the 80s. Right now it's trading in the 40s. Mean reversion sort of dictates that it will go back into the 80s. I have a small position of it. 5% of my portfolio is in the stock at this point, and my sell stop personally is 160. But I have to evaluate if and when it does go up, how far it will actually go. But 160 is the time when I'm out. But it could go as high as 300. If it goes to 80, if you buy it at 40, it goes to 80, you've doubled your money. That's definitely a nice risk-reward ratio for all I'm concerned. So I like SKF. Another one that I've done is, here's actually another view of SKF. So SKF hasn't really done that much over the last 2 days. It's gone from 40 to 45. I picked some up at 39. Down here I picked a little more up at 44. That was a little bit too high. Tried to buy some today at 41. It never went to 41. Should have done 41.50, but lessons learned as always. Got a little too greedy and didn't get the entry point, but it's back up at 45. I'm profitable. The market tells me I'm right. I like that. I also shorted Goldman Sachs. Goldman Sachs has gone for a very long high run. It's starting to encounter some resistance. I have 5% of my portfolio in Goldman Sachs short, simply because it's a stock I actually personally like shorting and going long. I've shorted and gone long Goldman Sachs many times. I find it a somewhat predictable stock. It seems to move in predictable ways. Now, some of the things that have not worked out is I was talking about having sold my DXO, which is oil double. That certainly was not a smart move on my side. Oil has now gone to $62. In my mind, it is way too fast, way too high, but the market says it's going up. It wants to price oil at $62, and we are not in a position to argue with that. So that was, I made money on it. I doubled my money. It was 100% return on investment. Not bad, but still I could have ridden it a little bit higher. I just took the position that it might be going down, so I sold out of it. And unfortunately too soon, but it's never a bad thing to take a profit if it's a good profit. Don't take don't take pennies profit and then hold on to large losses in terms of dollars. You cannot make money doing that. You have to have a substantial gain if you want to make up for substantial losses. Um, Natural gas is not showing any happiness here. We have well, it's hard to tell what this is right now. So right now I'm not really that interested in natural gas at this point. Copper is once again it's declining tops. Not particularly happy with this. China might be done buying copper for the time being. So uh, just wait and see. It's just a position that I'm not clear about what it's going to do, so I'm just not going to be part of it. Um, so looking at the S&P 500 again today, we had um, a substantial, reasonably substantial down day, something noticeable. It started up high and then it fell. This is a phenomena that I've seen many times before. If Monday is a large up day, Tuesday is frequently, it's also known as turnaround Tuesday. Tuesday is frequently the opposite. Tuesday turned out to be a doji, which is a star, which means indecision, and Wednesday opened up high, basically gapped high, and then fell down and closed lower. That is bearish. For the time being, let's see if we get follow through tomorrow. It could be if we get follow through tomorrow and we violate this low right here, then it could very well be that we're going to go into a multi-week correction of this current rally. And that's about all I have for today. Nothing really has changed. I'm gonna continue holding Goldman Sachs short. I went short at 140. Um, I will probably cover at between 100 and 120. I'll have to keep an eye on that. SKF, as I said, I've got an automatic sell in place for 160. But I might take 120. Again, I'll have to evaluate when I get there what the stochastics tell me, how overbought it is, how oversold it is, that sort of thing. The technicals will tell me when to get out. But that's sort of what I have out there on the horizon in my mind. And at the same time, I've got buy orders in to repurchase DXO as well as UYG. Again, if they drop somewhere around $2 or less, I will once again trade into these because I do not believe that this is a further low. I just think this is a correction of this rally, which is potentially the first leg in a new bull rally. I've said this before that I am not sure the economic problems are actually as large. Now in the United States, the economic issues are substantial, but this is now the 21st century where we have India, China, Brazil, Russia, other countries as well that drive the global economy, and there might very well be a recovery there, even if it does not happen as quickly in the Western world. So we have to keep an eye on that, and if that's where the money is, then that's, as traders, that is where we have to go because we follow the money. That's all I have for today. Have a good day and profitable trading.